The question everyone is asking, and that I'm asking myself too, and maybe you're asking yourself, is simply how far can Bitcoin go? It's going into the red, deep red, and it's intense. Because right now, we're breaking through major levels. We're going to talk about it today. We're brushing up against 70,000 and the market is being split in two. And let's not even talk about the altcoins yet. And meanwhile, gold is surging and breaking above $5,000 once again with simply massive volatility. And at the end of the video, I'll give you the key level that's coming back. It's showing up everywhere in the analyses. We'll look at that together. But first, we need to talk about what happened with Bitcoin, because this is pretty intense. Let's get straight to the heart of the matter and start with the facts. So what do we see? It's simply that Bitcoin has once again broken through a major level, and we've dropped below $73,000 with a wick that nearly touched $70,000. And right after the US market opened, we saw another sharp move. We're talking about $1,700 wiped out. In just a few minutes, over 55 million in long positions were liquidated. That is, people who were betting on the price going up, and tens of billions were wiped out across the entire market. What's even crazier is that this is happening even though the end of the US government shutdown was supposed to bring a bit more breathing room. And if we take a step back and look at the monthly chart, it's totally bearish, meaning it's completely on a downward trend. We've had 4 red candles in a row, and that's a sequence we haven't seen in a very long time. So what's happening now? What's important? Because politically things are moving as well. The partial shutdown, as I was saying, is officially over. Bitcoin has just signed the famous funding plan after a rather close vote in the House. So we're talking 217 to 214. As a result, the partial shutdown only lasted 4 days. So it's quite unsettling when you look at the macro data, because the BLS had to cancel and postpone certain releases. And it matters because these are the figures, especially these ones, that directly influence the Fed. And the good news in all this is that next week's CPI is still scheduled for now. And now we need to talk a bit about gold. What's going on with gold? Because this isn't normal. Gold has once again surpassed $5,000 an ounce with a huge rebound in a very short time. And above all, the 30-day realized volatility has exceeded 44%. So that's a level we haven't seen since 2008. And the most symbolic thing about all this is that gold has become more volatile than Bitcoin, which, remember, was the criticism from institutions saying Bitcoin is too volatile, too speculative, but now it's gold that is. And it shows just how much the markets have completely lost their bearings, because even so-called safe haven assets are becoming unpredictable, and that's affecting everything else. And inevitably, when BTC drops again, the question is, thank you. Will MicroStrategy have to sell? Bitcoin has fallen below Michael Saylor's average purchase price. Just to remind you, we're talking about $79,000. So yes, there's an unrealized loss, but it doesn't put the company in danger, as many people imagine. I wanted to reassure you on that point. Why? Because MicroStrategy doesn't use Bitcoin as collateral, so there's no such thing as a margin call. By the way, that's a movie I recommend you watch. Check it out. But as I was saying, their debt is actually unsecured with maturities. We're talking about 2028 to 2030. So they also have cash set aside specifically to cover interest and shareholder dividends without having to sell. So no, a temporary dip below the average price, we're talking about $79,000. Doesn't change their strategy at all. And I wanted to reassure you about that point because there was a lot of feedback regarding yesterday's live session. And I'll take a few seconds to ask you if you're enjoying my content. Just take a second to like and subscribe if you haven't already. And also turn on all notifications. Because yesterday I did a live because we actually touched 73,000, and I thought I'll do a live for the occasion to reassure everyone, to talk and answer as many questions as possible. So I'll go live directly, kind of spontaneously. That way you'll get notified. So don't hesitate to turn on notifications. Now that we've said that, the real question is, what is fueling this famous selling pressure that just keeps going? And if we look at the on-chain data, I'll zoom in a bit more on this super interesting chart. It shows us a very clear capitulation of what we call short-term holders, meaning those who have only held crypto for a short time. All right? So here, we're talking about tens of thousands of Bitcoins being sent to exchanges and those at a loss with the intention to sell and cut their positions. Quite simply, these are losses, and this is typically the most fragile profile. That is to say, first, they're reactive. Second, they're emotional. And third, they sell when it hurts. And when this flow precisely arrives all at once, the impact on the price is immediate and you can feel it directly. And this capitulation is also visible on technical indicators. We saw it yesterday during the live session. We did an analysis. Go check out yesterday's live because there's also some very interesting, very relevant information that was brought up in the comments as well. I'll refer you to it at the end of the video, maybe. But we saw it yesterday during the live session. I wanted to show you here because we have the RSI, which is the relative strength index, and it's in an extreme oversold zone. On the weekly chart, we're above 30. Let me remind you that we have these 70-30 thresholds that indicate whether it is oversold or overbought. And according to several analysts, Bitcoin is even more oversold now than it was during the COVID crash. Remember, during the COVID crash, we were at $3,000. So be careful, this doesn't guarantee a bottom, but it's a very powerful indicator, very basic, very easy to understand. Anyone can get it. 70-30. As soon as we hit 30, it's oversold. As soon as we're above 70, it's overbought. Even though in this cycle, we almost never went above 70. It was always sold off as soon as we hit 70. And actually, the RSI, since the all-time high before the halving, this is what we saw during the live, we've had an RSI and a downward trend line. Like I told you, it doesn't guarantee a bottom, but historically, zones like this only appear at cycle bottoms or very close to them. So maybe the end is near. We'll see. In any case, we're in a very interesting buying zone. Now that we've said that, the question everyone is waiting for is, how far can it drop if this continues? The question is, if it continues. We're in a market where retail investors, meaning individuals, are capitulating. Alts are getting crushed. And there are even platforms that are anticipating a scenario around 59,000 to 60,000. Personally, that's a scenario I had considered, but for an arrival between May and October, now we could reach it much sooner than expected. And we could have what is called a flash crash, a total capitulation, before possibly a rebound. But in any case, we could have an extremely short bear market and a very sharp recovery. We'll see. It would be interesting to follow this closely. We'll talk about it in the daily updates over the next few days. But what's interesting is that we have Bernstein here, who is also mentioning a bottom zone around $60,000. So potentially in the first half of 2026. That's a scenario I personally consider possible. So I think it's consistent. But the takeaway is that we could see one last flash crash here, which is plausible. But that would only be the beginning of a long winter. That could potentially be the starting point of the most important cycle. And here, I want to be very clear. At least on one point, it's about saying to yourself, I'm waiting for $60,000 and then I put everything in. So I go all in, what we call a lump sum. I've made plenty of videos on this topic for you. It rarely happens that way because right now we're in a really interesting zone for DCA. I talked about it in a private video for the club. If you want to join the club, the link is in the description. It's not mandatory. It's for people who want to define their strategy, go much further, invest in the best projects and access my network. And all the coaches who are there to provide you with a personalized analysis. You can book an appointment. It's completely free. There's no pressure. For 45 or 60 minutes, you'll be with a member of my team and they'll guide you. If you're feeling lost right now, book an appointment. That's it. That's the only requirement. It's completely free and you'll leave with some tips. There are only a few dates available. We really take people in very selectively. It's a small club with 50, 60 people at most. In any case, for now, I think this is the best time to define your strategy precisely. So if you don't have a strategy, book a call. If you're lost, book a call. It's completely free. No one is pressured. And then after that, it's entirely up to you whether you want to join the club or not. But do something. Don't be passive. Don't just endure the situation because that's the worst thing you can do right now. That's when you'll make the biggest mistakes, the biggest blunders. And I'm speaking from experience. I've been in the market since 2018. Anyway, you know what you have to do. But the idea behind DCA is very simple. It's that if you take advantage of a price that's already corrected, so we're already talking about a 40% drop, while still keeping some reserves in case we flush even lower. That is, if we pull the plug and the whole market gets drained. And the key point is that long-term holders are starting to buy everything again on this chart. And they're never the ones who panic on the way down anyway. And I'll finish on this note. The market doesn't like to be predictable. That is, if everyone, and I mentioned this during yesterday's live, I'll direct you to the live right after. If we're all waiting for $60,000, it's very possible that the real bottom will be just a bit lower. I'm also putting it on Instagram for you. I'm giving you the link. It's scrolling just below right now. On my Instagram, I give you a completely free analysis. In the next 30 to 60 minutes, add me on Instagram, follow me. I'm going to post as much content as possible on Instagram as well, completely free to help you out during times like these. Don't thank me, it's normal. I'm here to help. That's how it is. And that's why I created my channel in 2020, to share as much of my knowledge as possible, how I became a real investor, a successful investor. I want to make you winners, all right? So add me on Instagram, check out the live, take advantage of these opportunities. Loosen up, book a call for the club if you want. It's completely free, and at the very least, you'll have a clear strategy and be guided by experts in the crypto field. These are bangers. The coaches in the club, they're killers. Take advantage of it, book a call with Francois, with Alexandre, and they'll help you precisely in these kinds of tough moments. I'm trying to help you as much as I can. After that, it's up to you to take action and make the most of it. So go on Instagram and book an appointment. It's your decision, okay? But don't stay alone in your corner. That's very important. Leave me a comment. Let me know what you think about the situation. The point is to get your feedback, your feelings, and to adapt the daily updates accordingly. We don't give up. See you tomorrow for a new video. This was Julian. It was a real pleasure. Until then, take care of yourself. Ciao.